Hello from Chicago. Alan Knuckman high above the trading floor here at the CME Group, talking energy with the focus on crude oil. Little nervousness today. Down to 1 week lows, actually the lowest level since November 21st. Backing off a bit today, down 75 cents, 57.25. The low was 56.75, so below the 57 handle. Tomorrow is the day. We're only a day away. So the OPEC meeting that we've been waiting for is tomorrow, Thursday. Now, the only question is how far the production cuts will be extended. Is it going to be 6 months or is it going to be 9 months? That's what the market's waiting for. That is what's determining the price of crude oil right now, is everyone's focused on the production cut extension. Now, we talked last time a little bit about how Russia might be somewhat hesitant because they can be profitable with oil at these levels, and it doesn't encourage the shale drillers as much. So the higher prices go with oil, that can bring more shale back online, more competition. Let's talk about the fundamentals today. Inventory dropped. The EIA saw a drop of 3.4 million barrels of crude in their inventory numbers, about the middle of the expectations, halfway between the Wall Street Journal and some other private estimates. Now, this is interesting because the API numbers yesterday were completely different. They actually saw a build, and we haven't seen, for 4 weeks anyways, a conflict in our data numbers, but it didn't have much impact on the market. We saw the gas inventories move higher, 3.6 million barrels. And so I think with the oil, what it comes down to is that we saw the Keystone Pipeline have a little bit of a shutdown last week, and that was to be expected. So also, let's talk about lock-in load is the way we want to say this, because U.S. producers are hedging here. The hedges in the third quarter surged 150% to lock in future production. So they locking it in between $50 and $60. That is one of the reasons these markets exist. I can't say that enough. Number one, we can speculate on the prices, but we can also, producers can lock in future prices so they know what they're going to get as far as revenue goes. Or buyers, on the other hand, someone who has to use oil can hedge their prices as well. So that's the function of the markets, and it's interesting that they wanted to lock in between $50 and $60. So if prices do continue to move higher, they're going to give up some upside potential. But if prices do move down after this meeting, they've already locked it in for the quarter. So that did get my notice. So I wanted to pay attention to that. That's using the markets to lock in price. And it worked out to be about 900,000 barrels a day. So it's rather significant up here at these levels. So it comes back to sell the fact. Will that happen tomorrow after the announcement? Whatever it's going to be, is it going to be 6 months or is it going to be 9 months? I don't see any possibility of no production cut extension. So now we'll just have to wait to the wording. Is it 6 months or is it 9 months? Tomorrow is the day. Looking at price-wise, 55 is support. We talked about how crude had traded between 45 and 55 for more than a year, so markets can sometimes come back to their breakout point, so 55 should act as support, and 60 on the upside. We got up to 59 and change here recently. So let's sit back, let's see what the announcement has to say. Tomorrow is a big day.